Good afternoon, friends. I'm very excited to welcome you back to Expert Speak and to introduce you to today's speaker, Mr. Kusal Roy. He's the head of retail banking India at Standard Chartered Bank. I've had the privilege of knowing Kusal for over a decade now, and he's been a banker for 2.5 decades and has the experience uniquely of having seen credit cards in India grow from its infancy to being one of the most value generating businesses in banking today. Kusal has served as Managing Director and CEO of Tata Capital Financial Services, Senior General Manager and Business Head for Card Payment Solutions and Unsecured Loans at ICICI Bank. He's been a partner and director at Inc. Value Advisors, Managing Director at Barclays Bank PLC, and Director Cards Portfolio Management at Citibank. Kusal, welcome to the show.
Thank you, Adhil, for the kind introduction.
So, Kusal, before we get into discussing credit cards, the journey of the industry of the last 2.5 years, and the bounce back in COVID, I know you're a sports enthusiast and you love sports. Have you been playing sports through this COVID lockdown?
Yeah, I've been trying to keep up with some regular running and an occasional game of tennis, but it's not been easy with the mask mandate and all that. But yeah, I've tried my best.
Good. So now to the first section of questions. Kusal, you've seen this over 2.5 decades from being a baby, right? Today, a very, very large, profitable business across the country. Tell us about this 2.5 decade journey and how we got to 54 million cards outstanding in India.
Yeah, so I started my career in the mid-90s with Citibank, and as many of you would know, the whole cards franchise in India literally started with the acquisition of the Diners Club business by Citi in 1990. And in those days, in the mid-90s, I remember we used to have some 65% market share at Citibank, and the cards business was largely run by couple of players, right? Citi and then Standard Chartered and a couple of other Indian banks, Bank of Baroda and the likes. So at that time, the card was viewed as a status symbol. If you had a card of any sort, and forget Diners Club, a plastic in your wallet meant that you were somebody. So that paradigm changed rapidly once other banks came in, especially the private banks, HDFC, ICICI in the early 2000s, then SBI, and all the other public sector banks also joined the fray. So that changed really dramatically. And the cards business, together with the acquiring railroad, which was built parallelly, became truly inclusive. And people right up and down the social chain saw it as a payment tool rather than as a social, badge of some sort, which is the way it should be. So, in a country like ours with a burgeoning middle class, the opportunity was immense. And it is only logical that from the 2-3 million cards that we used to have in those days, today we stand at 54 million. And that also, according to me, is just the tip of the iceberg, because this business has many, many more miles to run.
Okay, so tip of the iceberg, but in order to get here, Kusal, what did we do well and what should we have done better in this journey to 54 million or 35 million card holders?
I think the good part was that the acquiring infrastructure has grown quite rapidly. So the avenues for usage have increased. And, like I said, with the inclusion of some of these private sector banks and the large public sector banks, which saw a lot of value in the cards business for themselves and for their customers, the business became truly socialized, democratized, if I may say so. And today, if you look at the scenario, it is very difficult for anybody to exist, at least in urban India, without the use of a credit card. You want to order something online, you need a credit card. You want to buy something of high value, you need a credit card. The credit card has also evolved as a product, right? It gives you rewards. It incentivizes you to pay electronically. there are a lot of loan products which ride on credit cards, right? So a loan on phone or dial a draft or whatever people call them. Basically, beyond the credit line itself, it's also become a lending product. I'm talking about term loans here, installment loans. And then, of course, the easy facility of revolving, of paying in parts, buy now and paying in parts. That flexibility is something that the credit card allows. So the question of socializing these benefits, letting people know that this product exists, I think banks have done a very good job of that. So while there is still some mistrust, and people of my earlier generation, my father's generation, would still think twice before using a credit card, but people of my generation and beyond, I'm talking of the young folks today, they see the card as a necessity. And that is what that value generation in the customer's mind is something that banks have done really well. And in many ways, whilst we're still behind, if you look at developed markets in Korea or even in the US, the percentage of electronic payments as a proportion of personal consumption expenditure is in the high 50s or even in the 60s. We are still, in the early 10s, 10, 11, 12%. So the headroom for growth is still very substantial. Well, 54 million sounds like a large number, but we are a country of a billion plus, right? 1.3 billion people. And even if you take the segment which earns enough to own credit cards, the number can easily be in excess of 100 or 200 million. The other thing which the credit card product has done is that it has really socialized the use of debit cards as well, which is essentially a sister product. It's also an electronic card payment product. There's no credit there, while some banks do extend credit on debit cards today as well. But banks have understood how to use the debit card product to drive engagement on savings accounts, as well as customers who have got used to credit cards also see value in the use of debit cards. So that usage has also jumped exponentially, which we don't always talk about when we talk about credit cards. The two are quite related, let me tell you.
Yeah, absolutely. So I think the two takeaways are that a lot of good things have happened. There are a lot more avenues and benefits to using credit cards. The point you made about paying for benefits, right? I always pay nowadays with my credit card for the benefit and then pay off the credit card bill. So personally, I can see that. Now you said that this is the tip of the iceberg, and a lot of people are thinking about where their career is going to be 5, 10 years from now. And you said that we can think about 100, 200 million cards. In order to get there, Kusal, what are the two or three things we need to do right in the next 5 years?
See, the cards business. This is a saying that I'm very fond of. If you look at the cards business as a ship, it turns very slowly. What do I mean by that? From a bank's point of view, a cards portfolio is very difficult to manage because it's very expensive. The technology platform is very expensive. Running a cards business with this, very operation intensive, very technology intensive, very service intensive. You have to have a call center. You have to have a large army of people attending to millions of customers that you will produce. Even though you can go digital to a lot of extent, but still it is very operations and technology intensive, which requires huge investments. Then on top of that, see, it is an unsecured product, right? While I said it's a term lending product as well as a revolving product, essentially it is unsecured on both sides. That means that the risk is much higher. So unless you have very strong risk management practices, very strong fraud management practices, and very, very competitive operations and technology infrastructure, by competitive, I mean efficient and good at service delivery, then you can't really run a cards business. So if you have to scale up, you have to get these factors right. Only then can you go out and acquire a lot of customers. There are customers out there. The second piece is customers also need to learn to use credit cards wisely, and it has changed significantly. I mean, in the mid 2000s, so I've seen a lot of credit cycles in this business, right? So you had a credit cycle in the late 90s. You had a big credit cycle around 2007, 8, 9, which was partly fueled by Lehman Brothers collapse as well. But Customers at that in those days were also quite irresponsible, if I may use that word, because unsecured credit was viewed as easy money. A lot of people felt that they could get away without paying. The bureau was in its nascent stage, and people used to just shift cities and retire their unsecured debts, saying, I'm not the person that you think I was. That has changed significantly now. So people, with the bureau being strengthened and everybody going by the bureau in the last 12, 13 years, customers also feel that they need to maintain a good bureau track record. So the culture's shifted there as well. But at the same time, I think it can be a little better than what it is. Um, the third area is the merchant area. I think the government can also look at a few incentives for merchants for accepting electronic payments. There are countries like Korea which have done it. They give tax rebates for merchants for accepting electronic payments, thereby strengthening the railroad and taking cash out of the system. So if we look at all three areas, what do the banks need to do? Become more efficient in technology, become more efficient in risk management, more efficient in operations. Customers need to use cards responsibly because it's a great product. And if they are more responsible, then it's much easier for banks also to extend credit. And of course, the question of what the regulator and the government can do to make the railroad easier for usage of cards.
Fair enough. That's great insight. So, Kusal, a question which I'm sure a lot of investors have in their mind, right? Is this growth going to come from the existing large players? Is it going to come from challengers who are going to grow quickly, or is it going to be brand new entrants?
See, I think today most NBFCs cannot issue cards because of various regulatory reasons. I think at some point we will see some of the large NBFCs also being allowed to issue cards by the government. I mean, it is a possible area where an intervention may happen. So that will surely enlarge the penetration of credit cards as a product. But in general, see, every person who enters the workforce today, and I'm talking about the white collar workforce and some parts of the blue collar workforce as well, today wants to own a credit card because of the reasons that I already outlined. It's a great product. It's very difficult to exist in an urban setup without credit cards, and that's rapidly extending to semi-urban locations as well. So in the mid 90s, if cards were being issued in 15 cities, today it is well over 100. If you look at the overall addressable market, so it will grow. I mean, the momentum is very strongly in favor of this product. It's a great utility product for the customer, and it's a very, very strong product for banks because it helps in ring fencing the customer across various directions.
Absolutely. So that leads us to our second topic. Now, in COVID, right, we've seen credit cards bounce back both in number and in spends quickly. RBI data in September shows 800,000 cards were issued. Spends across the board have come back. Tell us what is driving this rapid bounce back, which obviously gives us momentum looking into 2021.
Yeah, I was looking at some bureau data as of this morning, civil TransUnion data. And as it turns out, today in the month of November, we are roughly at about 85% of inquiries compared to January or February. So you're right. I mean, it's bounced back fairly fast. And the question is exactly, based on what I said earlier, right? It is a great product for customers, and it is a very important product for banks as well. So customers want the product. So therefore, inquiries will come. And the fact that spends also, if you look at spends, I'm not talking about new customers here, I'm talking about spends from existing customers. Data suggests that we are back at roughly 90% of where we were last November. And that's a tremendous finding, right? I mean, in spite of all the economic recession, all the COVID-related restrictions, in the month of November, we are at 90%. We're just 10% down over last year. That's a very significant statistic, which shows you how important this product is for customers and their lifestyles. While a lot of people may not want to go out physically, sitting at home if they need to purchase a credit card is a great product to have. and people want to use it, which is showing in the numbers. And therefore, people also want new credit cards because there's enough and more value in the market, which caters to this particular need for customers. So it's not surprising at all. And from the bank's point of view also, because of the fact that it is such an important product for customers, we are seeing customers regularize their accounts fairly quickly. So, level of delinquencies in credit cards, other than a few blips from the moratorium months, is regularizing very quickly. And we are seeing our own data as well, and we are very close to where we were in January and February as far as incremental delinquency is concerned. Customers don't want to risk
Right.
their lines being blocked or their cards being shut. They want this product.
Yeah, so very, very promising data exiting the moratorium. Now, you lead a large retail banking platform, Kusal. What has been the learnings through this COVID phase that are going to drive decision making next year?
One of the principal learnings is that we have seen many opportunities in digitization that we probably would not have looked at unless COVID was thrust upon us, right? And by digitization, I refer to front end as well as back end activities. So when I talk about front end, I mean customer acquisition, customer facing activities like service, etc. A lot of digitization has happened. So our entire call center has been working from home for many months. And that's something we wouldn't have imagined, right? A lot of our staff are sitting at home and working without any loss in efficiency. Now, that's only possible if you develop all these digital tools. And we develop them very fast, like many other institutions in the market also did. And more importantly, customers showed a very high rate of adoption for these digital techniques, right? So those are going to stay with us. And in the back end also, on the operations technology side, we have devised many, many ideas which help in increasing efficiency and reducing cost. And thanks to COVID, that whole process has been severely accelerated. And these are learnings, these are efficiencies which will stay with us well into the years to come. And that's something that's clearly a benefit, if one way to see any benefit in COVID. But, it's really opened our eyes in many areas.
Great point. And Kusal, you have a ringside view on the entire industry. So from the risk perspective, right, the Bureau says they have 250 million people who've taken or have a credit history. We have 54 million cards. How is risk being looked at in light of COVID, and what are the learnings?
So, if you look at the Bureau data, a large part of this data will be, small ticket credit like consumer durable loans, two-wheeler loans, also gold loans. That accounts for a large portion of the Bureau universe. The continuous endeavor of lending institutions is to, upgrade customers as they show better and better credit performance. So over time, as consumers become more seasoned in the use of credit, you will see that there is an upward migration in terms of loan product and loan ticket size for these customers. So unsecured credit to secured credit, low ticket size unsecured to high ticket size unsecured. These are the kind of migrations that you will see. And it's also a game of databases. So people who have large sets of data of good performing customers will be able to see more benefit by upselling them and upgrading them in future. So it's great that we have so many customers in the credit universe, and one can only see a bright future for upgrades and upsells.
Fair point. Fair point. Now let's move to the next topic. And this is, you mentioned earlier that digital has gotten closely aligned with the credit card industry. And we're seeing, that the number of consumers spending on digital, applying via digital increasing. Just give us some idea as a senior business leader, right? How you're seeing the role of digital as a contribution in the next phase of credit card industry growth, both front end and back end.
Yeah, I think it is a very, very central pillar of the way we want to do business today. And not only from our side, our perspective, as I said a little earlier, we have seen huge increases in adoption on the customer side also. And these numbers used to be fairly small earlier, right? If I go back 5 years, there were a lot of institutions who were struggling to acquire more than 5, 6, 7% of their customers digitally. The government has taken a lot of steps in simplifying KYC and digital adoption of such requirements. Aadhaar was very, very helpful. Aadhaar enabled KYC applications were very, very helpful, and that's really helped us. That's really helped us, and customers have taken very readily to the method of digital acquisition. So if you look at cards 10 years back, almost all your cards were acquired through direct sales agents. From there, it has been a steady movement into internal databases, pre-approved, who can be acquired digitally. Then with external partners like yourself, people like BankBazaar, who are doing a tremendous job in driving digital adoption for customers by setting up marketplaces where all banks are present and customers can come and choose the best possible product and then apply digitally. So these are technologies and initiatives and enterprises like yourselves which have made life really easy for customers. And banks are seeing a lot of value because if you get the game right, digital can cost much lesser than physical channels of acquisition and with better customer experience. And the other important point which banks should consider is that customers acquired digitally also seem to show better performance, not only in terms of spends and revenues and so on the card side, also better delinquency as well. We see significant difference in delinquency for customers acquired digitally.
Yeah, Kusal, can you hear me?
Yeah, I can hear you.
Yeah, so on your point, in terms of the digital consumer, and again, just basis what you've seen across the industry, we find at BankBazaar, right, these people tend to activate more. They're already on e-commerce, they're already ordering food online. So it's the kind of consumer who knows how to use a card and is also a consumer who the bank likes. Is that a fair assessment that that's one of the things that's also pushing the digital growth, which is the quality of the consumer and the portfolio?
Yeah. I think you missed that piece. I was just talking about that when you went off air. So I was just saying that we have seen that digitally acquired customers also show better profiles, both in terms of revenue generation, spends, and their habits on where they spend, as you exactly alluded to, and also they show better credit performance because the customers select the self-select that this channel drives creates customers with better risk profile. So it's a win-win in many respects, apart from the fact that acquisition costs in a well-run digital setup is actually lower than physical acquisition costs. So it's a great win-win for everybody. The customer gets all the benefits of a non-face-to-face interaction with minimum friction sitting at home or office or wherever. And from the bank's point of view, you get better customers with better revenue profile and better credit profile. So it's a great win-win for everybody.
Yeah, absolutely. So the next question, Kusal, often I get asked saying, "Are you collaborating? Are you competing with the bank?" And our answer is always that the attempt is to benefit both parties. But what's your view, right, as a senior banker? When you think about the fintech ecosystem, is it more collaboration or is it more competition?
No, I am very, very convinced that the future for fintech lies in collaboration because, see, the banks have the customers, the banks own the channels in many ways. Fintech simplifies it, fintech enhances the customer experience. So I think it has to be a complementary activity. And I think Bank Bazaar is a great example of that. And I've worked with you for the last 10 years in various capacities, as you rightly said, in various kinds of partnerships. And I've always found that it is a mutually beneficial ecosystem. I mean, you guys bring customers to us and we give you revenue in exchange for those customers. And the channel and the experience that the customers have is fairly positive for us as well as for the customer. So it's a highly complementary and symbiotic existence.
Absolutely. And Kusal, going into 2021, what kind of new things or innovations are we expecting in the credit card space, but also broader in the retail credit space? What guidance can you give, the bankers out there, the investors out there? What are the new things we're going to start seeing become market movers in 2021 in retail credit across the board?
I think, like I said earlier, a little bit of incentive on the part of the government or the regulator for merchants to accept credit cards in the shape of tax benefits would be very, very useful. And that will give this industry a huge fillip. Not only credit cards, also debit cards, which kind of ride on each other, right? So I think that's something to look forward to. And hopefully the government will consider it at some point. As far as customers go, I think there is a wide variety of choices in the market, and with more players coming in, and there's a possibility, like I said, that the NBFC players might come in as well. Banks will continue to see more value in this business. Customers will continue to see a variety of products which will come in. I think it's going to be a fairly steep scale up in this business in the next 3 to 5 years, starting from next year, as COVID kind of slips away and vaccines do come in. The future is very bright.
Got it. And I know retail loans is not part of this topic, but this is something you look at very closely. Given that the moratorium is behind us, what does 2021 in India look for retail loan lenders on the personal loan side, Kusal?
So I think this is an area which has recovered far less slowly compared to cards. And I think consumers have also been careful in not to over leverage themselves in the times of COVID, where repayment capacity is always at a constraint. And banks have also been quite selective, because obviously the moratorium took away a lot of customers, and the personal loan product being an unsecured loan product, banks have also tightened their lending criteria. So the offtake that we have seen in the last few months is significantly lower than the pre-COVID days. Again, the bureau data shows it very clearly. And while cards has a ubiquitous presence in the customer's wallet because it is required for day-to-day activities, people are more careful because personal loans are essentially discretionary in many ways, right? So you want to cut down on discretionary spend in times of economic stress. So it has had a depressed outlook for the last few months, but I expect it to bounce back strongly by the end of Q1 next year, when life kind of starts returning to normal.
That's great to know. That's great to know. So, Kusal, I think that now we come to the last question, and this is not about business, but people look up to you as a leader. This is a tough phase for everyone. I think we're just looking to get out of this. All the strangeness pushed on us by COVID. How do you keep yourself positive? How do you inspire your teams? Just any advice to people facing a tough time, either professionally or personally, in dealing with this pandemic?
I think to each his own, but let me tell you what works for me. I typically, there's no point worrying about things that are beyond your control. I mean, you're not the only one who's suffering from COVID or COVID related issues. I got COVID myself in the month of October. And, I got lucky. I recovered fairly fast. Some haven't been so lucky. But the fact is that this is not something you can control beyond a point. And there are millions of people across the world who are getting it. The economies are suffering. Sentiment is generally down. But the good part is that no crisis lasts forever. Right? This too shall pass. And there's always a brighter tomorrow. So you should persevere and plan for the brighter tomorrow that lies just beyond the corner. And this is not a Trumpian just beyond the corner. This is a real corner that I'm talking about. So hopefully we'll get there and get there soon enough. And the best thing that we can do is to make sure that we're fully prepared to take advantage of the good times and scale up business and get back to normal life when those good times come. Stay positive and don't worry too much about things that you cannot control.
That's great. So really appreciate you so openly sharing with us 25 years of insight. I'm sure a lot of people have benefited from hearing not only your view on what it took us to get here, but that this industry, we're still at the tip of the iceberg, and there's so much success to be had in the next 5 years. So thank you so much for your valuable time, Kusal.
Thank you so much, Adhil. Pleasure interacting with you. All the best.